Federal Reserve Chair Jerome Powell signals the central bank could begin easing monetary policy next month, cites sweeping changes in trade, tax and immigration policies. Stocks on Wall Street soar in Friday's trading session on the back of the Fed chair's speech. Dow Jones posts a record close, surges 800 points. Nasdaq adds nearly 400 points. Asian markets open higher, tracking Wall Street's Friday moves on a potential Fed rate cut. The GIFT Nifty is indicating a positive start for our own Indian markets. Crude oil prices hold on to gains from last week as Ukraine peace talks stall and Fed Chair Jerome Powell signals monetary policy could ease. Gold prices to rebound on the back of the chairman's speech. CNBC TV 18 Newsbreak confirmed the GST Council is set to meet on 3rd and 4th September to take up Centre's proposal of rate rationalization. Good morning in the Mumbai News Centre. I'm Vamakshi Doria and you're watching Power Breakfast. Well, on Friday, it was a very good session for Wall Street, especially after the comments made by Fed Chair Jerome Powell in the Jackson Hole Symposium, indicating a rate cut in all probability in the very next month. And taking from that, the Asian markets as well have opened higher, given the handover that came in from Wall Street was very positive. The Taiwanese index is up almost 1.8%. Hang Seng is also doing quite well, up 1.24%. But apart from these markets, take a look at Kospi. That too is up almost 0.7%. The Nikkei also trading with similar gains. Apart from that, I can see the Australian index is also, up almost 0.3%. So there's no complaints as far as Asia is concerned. It's a green-looking screen. Let's take a look at what the GIFT Nifty is indicating for our own markets. And no surprise there, it's an almost 60-point uptick for now. But how will all of these overnight cues impact our Indian markets? We now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, we have Hormaz joining us with cues from the market space. Hormaz?
Good morning, Vamakshi. And it was a case of so close yet so far for our own markets. At least what should have been a move towards 25, 250, 300 levels has now gone down to defending that 24, 800, 850 mark. And although we ended with the second straight weekly advance, the souring of the sentiments took place on Friday when the bears were in firm grip with over a 200-point fall. And what is more important is the fact that despite that weekly gain, we have almost closed at the lows of the week. So that 24, 852 level continues to remain a very important level on the downside for the index, and even the advanced decline ratio was adverse, but despite that, the broader markets were fairly resilient in comparison to the benchmark indices at least. Now, of course, that level on the downside which we mentioned, but for the Nifty on the upside, 25,000 to 25,150, that continues to remain a congestion band. Every time we make a move towards that level, we are not managing to sustain above those, even though the index did close for a couple of days above that 25,000 mark. Now, for the Nifty Bank to 55,000 is a very important level simply because it has not closed below that level since the 22nd of May. So that remains a key monitorable for the index, and it was the banks that led the Nifty lower in Friday's trading session. Now, of course, we need to react to that potentially strong handover from Wall Street. Also need to take in account the higher gold prices and the weakness in the US dollar as well after Jay Powell's address. That was indicating a rate cut, and that led to that Wall Street rally on Friday. The other major trigger is the Nifty rejig that was announced on Friday, with Indigo and Max Healthcare now entering the index and Hero MotoCorp and IndusInd Bank making an exit from the end of September. Now, broker estimates are estimating inflows of close to 550 million for Max, for 412 million in Indigo, and outflows of close to around $300 million in both Hero and for IndusInd Bank as well. Of course, there are important triggers to watch out for this week. The reciprocal tariff deadline of the 27th of August. Of course, that's a holiday for us that day, but you need to take into account for that. The GDP data for the quarter, Nvidia's results this week. So it's a lot of action that lies up, even though we are heading in for a truncated week. For now, the GIFT Nifty is indicating a marginally higher start for our own markets.
Well, thank you so much for that, Hormaz. Indeed a short week, but definitely an action-packed one. Now, moving to Sudarshan, who's joining in with cues from the F&O space. Good morning, sir.
Good morning. So on Friday, we saw it was a pause to 60 gaining streak, and finally again Nifty was back below 25,000. So for now, again 25,000 comes into the picture, remains the important level for Nifty. If Nifty has to move higher, it has to firmly close above 25,000. 2 days continuously we did see close, but again Friday we did move low, and that was largely courtesy IT stocks, because on Friday we saw big selling in IT, but we are getting positive global cues from Wall Street, where we saw big move in all the IT names. Nasdaq was also up almost 2%. So we'll have to see how do IT stocks behave today. As far as GIFT Nifty is concerned, it's indicating a start with a gain of around 60 points. And Friday's move was reflecting in the flows front as well. We saw in the cash market both FIs and DIs selling. FIs have sold more than rupees 1,600 crore. Even DIs have sold more than rupees 320 crore. In the index futures, two FIs have sold nearly 700 crore. And they have added long positions of just 1,100 contracts, but at the same time they have added short positions of more than 4,500 contracts, and now FI long exposure remains around 10 to 11%. On the option front, the biggest addition in the call option we have seen in 25,000. That's the reason I told you 25,000, it's a very important level. On Friday, we saw 25,000 calls see addition of more than 1 crore shares, and with premium around 72, and 24,900 call saw addition of nearly 65 lakh shares. On the put side again, 24,900 and 24,600 have seen maximum addition. That's the reason support for now Nifty remains around 24,730, and first resistance is 24,950. If we manage to cross that, next resistance comes around Friday's high of 25,080. Three stocks are in the band: RBL Bank, PG Electroplast and T-Tiger. Apart from that, keep an eye on IT stocks like Infosys and HCL Tech, and also keep an eye on Mazgaon Dog on the back of news flow.
Well, thank you so much for that. So those are some important levels as well as stocks that we will be watching out for. But over to Ria now, who will list out all the stocks to watch out for in today's trading session. Ria?
Well, good morning. Let's take a look at the stocks to be in focus today. The first one is Brigade Enterprises. They've signed a strategic long-term lease for mixed-use development in Chennai, and they have also announced a new residential project worth about rupees 950 crores in Bangalore. And further, the CFO of the company, Jayant Manmadkar, has resigned with effect from the 9th of October. So keep your eye out on Brigade on the back of all these pieces of news flow. GMR Power to also be in focus. The board has approved a fundraise worth about rupees 3,000 crores. For Signpost India, the company has been awarded the rights for 67 metro stations operated by BMRCL till 2034, and the potential revenue expected from this is about 600 to 700 crores. Akams Drug to also be in focus. They are going to set up a manufacturing facility in Zambia, and they're looking to export to other South African nations as well. Yes Bank, for this one, SMBC has received RBI's nod to acquire up to 24.99% stake in the company. Also keep your eye out on two stocks on the back of order wins. For Interraj, they have bagged orders worth about rupees 90 crores from Rangta Mines, and for Titagarh Rail, they have bagged an order worth about rupees 91 odd crores from Banaras Locomotive Works. The last one to keep your eye out on is Mazgaon Dock. Now, as per reports, the centre has given its nod to the Defence Ministry and to Mazgaon Dock to begin negotiations for the rupees 70,000 crore submarine deal, the P75I deal, which was delayed for the last 6 months. So that is a big positive for the stock.
Thank you so much for that, Ria. But moving on then, L&T continues to get good order flows, says Chairman and MD S.N. Subramaniam. He is also betting big on the company's real estate business, and a potential listing could happen in a year or two. Speaking exclusively to Lata, the L&T chairman said work is in progress to improve return on equity to 18%.
Look today, the backlog of orders to be executed is more than 6,25,30,000 odd crores, which means from an EPC point of view, we are more than 2.5 years of work as we look forward. And these are fairly fast-track orders in the sense many of them have to be done in 2.5 years, 3 years. So as an organization today, we seem to be on a firm footing. We have 5 orders from NTPC for boiler and turbine. We have 8 orders for boiler and turbine from Adani Group. And in a short while, we expect some more orders. Any rationalization being attempted will be helpful. I'm extremely happy that the government is thinking about it. And if they do this rationalization, it's another positive step towards, in my view, ease of doing business. When we talk at the management level, our executive committee level, at the board level, we focus on return on equity. We have from 12% we have pushed it to 17. I'm reasonably confident there was an internal target of getting to 18. We will do that.
Well, that was the L&T chairman and comments coming in from him on the order book. But let's slip into a very short break. Up next, we get you global market updates and tell you what led to the rally on Wall Street. So stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. And in the US market, the Dow Jones rallied to an all-time high on Friday after Federal Reserve Chair Jerome Powell signaled the central bank could begin easing monetary policy next month. The Dow and Nasdaq climbed nearly 2%, while S&P 500 rose 1.5% on the back of Powell's comments. CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
U.S. markets surged higher across the major indexes in Friday trading after Federal Reserve Chairman Jerome Powell hinted that an interest rate could be coming in September. Now, the Dow, which posted a record close, added 846. The S&P 500 was up 97, and that tech-heavy Nasdaq gained 396. Now, during his highly anticipated speech at the Kansas City Fed Symposium in Jackson Hole Friday, Federal Reserve Chairman Jerome Powell said that shifting risks, quote, may warrant adjusting our policy stance, which presumably means a rate cut. He also said risks to inflation are tilted to the upside and risks to employment are tilted to the downside, which he called a challenging situation. Powell warned there are threats to the economy's current resilience, namely that tariffs could cause inflation to rise again, creating a stagflation scenario, which is that combination of high inflation, stagnant economic growth, and elevated unemployment that the Fed is trying to avoid. Canadian Prime Minister Mark Carney announced on Friday that the country was removing many of its retaliatory tariffs on the U.S. Canada levied those initial tariffs in March after the White House announced 25% duties on Canadian steel and aluminum. Now, it's a move that the White House called long overdue, and it marks a big step forward in the tense trading relationship. But Carney did say tariffs on U.S. autos, steel, and aluminum will remain in place for now. The changes go into effect September 1st. That's what's happening here in the U.S. Back to you in Mumbai.
Well, thank you so much for that. But, in his address at the Jackson Hole Summit, Fed Chair Jerome Powell opened the door for rate cuts, citing job risks. Let's take a look.
While the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. And that is a risk to be assessed and managed. The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Well, let's also listen in to what Cleveland Fed President Beth Hammack and former Boston Fed President Eric Rosengren had to tell CNBC on the outcome of the Jackson Hole Summit.
The chair is open-minded about what the right stance of policy is going to be and what the right decision is going to be in September. What you're looking at right now is we've got an economy where inflation is too high and it's been trending higher. We have an employment side that is reasonably close to full employment and has been balanced and healthy for the better part of a year. It's been pretty consistent in that 4 to 4.3% range. And what you heard from the chair is that this is a challenging time for monetary policy. My expectation, and it sounds like his as well, is that we'll see inflation continue to rise. We may see unemployment continue to rise as well. And that's a challenging moment for monetary policy to think about what the right way to balance things. For me, what the decision really comes down to is that inflation is too high. It's been trending higher. It puts a real pinch on lower income households. We've been above our target for 4 years, and we need to get that under control. And so to me, we need to maintain a modestly restrictive stance of policy to get inflation back to target.
I think it's a mildly dovish speech. I mean, the phrase that you just highlighted with policy in restrictive territory, it may warrant adjusting our policy stance, certainly gave a tilt towards easing, which is a little bit more strong in the language than I was expecting. It was a fairly balanced speech. He meant it to have a slightly dovish tilt. The markets may be reacting more strongly than he intended with the language he picked. So I think it does reflect the challenges that the Fed has right now, that while it is slightly restrictive in terms of its stance, there's still inflation that could be in the threes over the next 6 months. And yet the labor market is definitely a little bit slower than it was a while ago. And he has to be concerned that he doesn't want to have the unemployment rate go up too quickly.
Well, on that note, let's slip into a very short break. Up next, we get you cues from the commodities market, so don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Bajaj Auto MD Rajiv Bajaj has welcomed the proposal to cut GST to 18%, even as he predicted a near-term slowdown in sales and also spoke on light rare earth magnets. Let's listen in.
That, you are not doing them a favor by bringing in 18% in place of 28%. It is still high compared to, let's say, a median of 12% by as much as 50%. It's very welcome. It's fabulous. It's fantastic. It'll be great. But it is still on the higher side. 100%, there will be a slowdown. But that needs to be qualified by the time period. For example, the slowdown which has already started, and let's say, for example, arbitrarily that the new policy comes into effect from 1st October. Definitely industry will see a slowdown between now and end of September. As far as LRE is concerned, we started receiving clearance for our shipments from approximately 3 weeks ago. It didn't coincide with any visits from India to China or the recent visit from China to India. It's not an automatic outcome of that. This had started before. But what we are seeing now with respect to LRE or light rare earth is that the slow process of movement is accelerating.
Well, my colleague Abhimanyu also spoke to M&M Auto's Nalinikant Gulagunta on how the company tackles competition and the growth outlook going forward. Let's also listen into that.
Yeah, so EVs is in a category creation mode right now as a category. And the more players come in, the more choices customers have, I think it will lead to more adoption for the category itself. So we're quite happy when competition walks in and brings products in. And every time new choices come in, we see the adoption of EV go up as well. So we welcome any more cars coming in, including the Maruti vehicle coming in.
Moving ahead, what kind of overall opportunities in the sector you're looking to encash in? How is the market outlook looking like moving ahead? What are the kind of asks you feel the industry has from the government side and on the policy end? What tweaks can possibly be made for better growth in the industry?
Yeah, I wouldn't want to comment on the discussions we have with the government. SIAM has a very close relationship with the government policymakers and will continue to use that forum. I think from an outlook perspective, we are still quite positive on this segment right now for the year. We had put out mid to high teens growth for the SUV business of ours in the beginning of the year. We stay with that. So far, we have done about 22% growth in the first quarter. So we're quite gung-ho around that. The demand for our products and portfolio is quite strong. And so we are optimistic that we'll meet the challenge.
So those were the comments coming in from Bajaj Auto as well as M&M. But let's shift our focus to the commodity space now. We now have my colleague Manisha Gupta joining us with all the updates from the world of commodities. Good morning, Manisha.
Morning, and thank you for that. I'll start with the crude oil prices, which seem to be holding on to its gains from the previous week. Remember, even as the crude oil prices are holding firm, the markets are looking at Russia-Ukraine peace talks getting stalled, and there is escalation between both these countries, and that perhaps is adding premium to prices. But closer home, it is about U.S. threatening to double tariffs on all imports from India to 50%, and that starts from Wednesday, that's 27th of August. Markets also are considering possible demand implications from India, and the global headlines clearly continue to be that one. I also want to put focus on the gold prices, because with the dollar index gaining towards 98 and markets pricing in an 87% probability of a September rate cut, we have seen some support come in for the gold prices. Also escalating tensions between Russia, Ukraine, and the dollar index, which declined by a percentage point on Friday, and expectations of rate cut and demand for India continuing stronger because of the festival and the wedding season forthcoming. There are some supports that we see in this space as well.
Well, thank you so much for that, Manisha. But on to some weather updates. At least 11 people have been killed in Rajasthan as heavy rains wreak havoc in the state. More than 100 people have been rescued, and orange alert has been issued for several districts including Ajmer, Bhilwara, Jalore and Pali. Schools have been shut in about 20 districts for 1 to 3 days as several areas see flood-like situations and waterlogging. Well, the latest on Russia-Ukraine war, Moscow has accused Kyiv of launching dozens of drone attacks, including one that sparked a fire at a nuclear power plant as Ukrainians marked 34 years since the country gained independence from the Soviet Union. The drone attack on the Kursk nuclear power plant in western Russia, 60 kilometers from the border with Ukraine, caused damage to an auxiliary transformer and forced 50% reduction in the operating capacity of a reactor, according to Russian authorities. Ukraine did not immediately comment on the alleged attack. The International Atomic Energy Agency reported that radiation levels were normal near the Kursk plant. The IAEA has repeatedly warned of the risk of fighting near nuclear plants after Russia launched its full-scale invasion in February 2022. Well, that's all we have on this edition of Power Breakfast. Don't go anywhere. Bazaar Morning Call comes up next.